It's Rob McEwen. He is chairman and chief owner of McEwen Mining. Rob, welcome to Kitco.
Thank you very much, Michael. Great to see you.
During gold's darkest days, and we're talking about the last half of the last decade, you were steadfast. You were reminding us that metal has cycles. I saw you at all the shows. You had your charts. You had your graph. You're reminding us that gold comes back. Rob, has gold arrived?
It has. And it's being fueled by an expectation that there's going to be depreciating currencies around the world. The recent example of government largesse in terms of opening the treasury to deal with COVID, it might be a thinly disguised scheme to get the economy going. The economy was slowing down later last year, and here's a chance to push money out in every direction. And it's not just one particular country doing it. There's every country in the world. There's more than 150 currencies that are where countries have just opened their wallets and said, we're going to do anything to fight COVID. So I believe there's going to be a lot of depreciation or loss of purchasing power of currencies around the world. And that's when people turn to the precious metals and other hard assets that hold on to value.
Rob, this is a perfect storm for you. This was really part of your thesis. It was about the Fed and other central banks taking these actions right now to actually support their economies and thereby driving people towards gold.
Yes. As you said earlier on, Michael, we go through cycles, and there's moments when the economy is running strong and there's no concern about purchasing power. And then it turns into these periods where you can get big runs. If you looked at gold's up since March about 18%. Silver, which we talked about just before the interview started, it's up 83% in that same time. People are turning to some of these metals. And you're seeing some of the larger names in the market, the generalists, starting to say, you should put some gold in your portfolio. You should put some silver in your portfolio because all the printing of money is going to be detrimental to your savings and your portfolio.
I want to talk about generalist money in just a moment, Rob, but you did mention silver. There's a lot of interest. We're seeing it right now at Kitco. Can you talk about what the drivers are for silver right now? There is obviously what is happening with green technology, and there's also it being a precious metal and having those pieces. What are you making of this rally right now?
Production numbers and some of our revenue stream is from silver. And we put it on a gold equivalent, and we were using an exchange ratio of 104 ounces of silver to 1 ounce of gold. A day or two ago, I looked at it. The exchange rate had reduced to 86 ounces of silver, about 1 ounce of gold. If you look across time, you could see 50 to 1. It got down below 30 to 1 in the last bull cycle we were in. So you have an acceleration of the performance of silver relative to gold. And the third driver of silver is the price of gold itself. So you have a compression of the exchange ratio and following gold and some health issues. And on top of that, there are very few pure silver producers. So it's a relatively small pool of companies that you could get direct exposure to silver.
Of course, also you have the operations down in Latin America, and then on the supply side, from these relatively few number of companies, we're seeing that there has been some significant production disruptions from what happened to COVID-19 and some of the suspensions and closures that happened through Q2.
Absolutely. And in some of the Latin American countries, South America in particular, they're seeing big increases in COVID. It's the other end of it's the opposite cycle in terms of weather. In Argentina, where we have a mine that has high grade silver and gold, there's still in force bans on traveling between the various provinces. And most of our mine is in southern Argentina, and the bulk of our workers come from northern Argentina. So the mine's operating at about 50% capacity. You look at Argentina, there are no flights moving in the country right now. We have a couple of people stuck in San Juan. And they said to get to Buenos Aires is a 15-hour drive, and then there's a 2-week quarantine period. Mexico is similar. They're seeing their cases going up as well. So, yep, you could have supply disruption on top of the other factors I mentioned, definitely. And that would be true of gold production, not only in Latin America, but I think COVID just highlights the issue of the unpredictability of production. That you could have, say, all of a sudden you have a COVID case, and maybe you can't go underground. Maybe you shut your mine down as part of your policy to prevent spread. We did that when COVID first started. We didn't go to the PDAC. No one in our company went. It was just a decision. And then we, as a precaution, we shut down our operations in Ontario, in Nevada, and the government mandated a shutdown in Mexico and Argentina for a while.
Let's stick with operations. Can you bring us up to date with the recent quarter from McEwen Mining?
It wasn't very good. It was impacted by COVID and some operational issues. Our Gold Bar mine in Nevada, we built that last year, and it was slow ramping up. And then the feasibility study we used was based on a geological interpretation of the controls for the mineralization. A year after we built it and started operating, the firm that said, here's the geological model, came back and said, oh, it's a different model now. And we went, I beg your pardon? Well, rather than lithologically or stratigraphically controlled, it's controlled by structure and vertical. And so what's that mean? Well, there's fewer tons and fewer ounces. And you're going, really? How come now you're telling us this? Anyhow, so we've been running around drilling to confirm the ore there and redoing our resource models, reserve models, mine plan. So Gold Bar was slow, Black Fox was slow, Mexico was on target, but it's small, and we also had shutdowns in Argentina. So it wasn't a happy quarter from a production standpoint, and that was on the back of a bad year last year. So, but we do feel we're turning the corner and it's coming under control, and we're getting back on stream, and our goal is to catch up with the rest of the industry.
Do you have a sense of production and what you might come in at and what 2021 might look?
The picture on 2021 is clearer than 2020 at the moment, but we'll have our resource numbers on Gold Bar out in August, along with our mine plan. So I'm vague right now on that.
We mentioned at the top of the interview just growing interest in precious metals. I do remember you talking about, and this was again talking about 2 years prior, just waiting for generalist money to enter the industry, and then talking about a broader attention to the potential that you can get out of precious metals. Do we really have that broader interest now? And then also, how do you measure it? How do you say that we really do see that people are coming into the sector?
A couple of articles recently. I think Barron's talked about billions of dollars flooding into the gold space recently. It's still a very small percentage of the portfolios have exposure to gold. But you can see what happens when some of that money starts coming into the sector. I mean, since March, the GDX is up about 105%. The GDXJ is up 134%. That's money coming in, and the money was first favoring the seniors, and the intermediates and juniors were lagging. In the junior space, however, there were some really interesting exploration stories that have been moving very quickly. Once I think a larger portion of the population starts looking at gold and say, how do I get exposure there? And oh, by the way, what are these juniors? How are they running up? They're not 1 or 2x, they're 5x, 6x on some of these stories. It's a sector that was totally ignored in the precious metal space. And what everybody's starting to think about is, well, the seniors cut off their exploration programs. They're going to have to buy to get their growth, to make their story more appealing to the broader sector. They're good, but their momentum is not going to be as strong as the intermediates and juniors.
Keeping with that theme of mergers and acquisitions, of course, we went through the last cycle, and then also the mining sector did, how would you say, overextended itself. It had a bit too much of a party, which also created kind of, how would you say, an overhang with the industry. Now, Rob, I bring this up because you've always been very good in talking about or calling out bad behavior within the industry, whether it's not having enough skin in the game with senior management, or whether it's talking about such things as too much compensation at some of these companies. But can you tell, is there anything right now? It looks so far that, the mining industry as a whole has actually kept itself together on this. There's been no bad behaviors, but as the precious metals continue to rise, is there any worries or any concerns that you see?
The compensation out there at a senior level still doesn't reflect the performance. I think the senior people in the industry are being very well compensated for what they've delivered. I think they could have reined that in a bit. Definitely like to see more money invested, but people are putting money elsewhere, it seems, rather than in their companies. The seniors, as you said, and well, I guess a lot in the industry got overextended with what appeared to be cheap money at the time. And the thought of the metal prices dropping by 45% was inconceivable or unanticipated. And so there was a lot of trying to repair the balance sheet and get rid of the higher cost producers. At least the seniors were doing that. And they're getting good cash flows right now. They're starting to pay dividends, increase their dividends. So increasing the appeal to a larger group of investors that have an income consideration when they're making their investments. So I'd say they're getting better. There was a rationalization in the industry. So a shrinking number of companies to play in. But I still, there are a few out there that try to reprice their options when their stock's fallen. And I really think that's bad behavior. When we were issuing options, we were adding a 15% premium to the price, the closing price, for the exercise price in the past, just feeling that shareholders had invested often at much higher prices, and we shouldn't be giving ourselves cheaper stock because we haven't put any money in. It's an option is an option. There's no commitment financially. So are they doing better? I think they're doing better. I mean, it was quite a hit from 2012 to 15. It was a very steep decline.
Rob, last question. Of course, we had this last run-up that came off of the 2008 financial crisis when you had the collapse in property prices, and then just generally the skiddiness around what was happening with financial institutions. In this cycle, what we had is we've had forced closures of the economy due or suspensions of the economy purposely brought on by COVID-19. And we're certainly looking at much more intervention by the governments, and you see much more propping up of industries through the financings, through what central bank interventions are doing right now. Is there anything that you can look at and then you can say that is different comparing the run-up that we had off of '08 compared to the run-up that we have now?
'08 was an imminent financial collapse. That was the belief. The government stepped in, bailed out. They issued, the central banks started printing money very, very quickly. And the governments jumped over all their rules to try to fix the system. Here we've seen another case where the government, not just the US or European Union, but governments around the world have enacted essentially martial law, put curfews in place, specified behaviors for their citizens. It's a worrisome trend because they're getting used to enacting legislation that is more forceful and restricting liberties. You wonder if this period of COVID is going to do away with paper currency, because they'll argue that there's a virus on that paper. And they will then be able to track everybody's financial transactions, their income, and thereby get a better sense of who is not paying tax. If you all had just had a digital currency, or you weren't using paper money. I'd say we had the run, we had the bottom in 15, and then it ran up in 16. It petered out, and now it's stalled, and now it's running again. And I'd say, Michael, we're early stage. We're still early stage here. I had a number of 5,000. A lot of people have jumped ahead of that and have much higher numbers now. And I could see higher numbers given the huge amount of financial stimulation around the world, and the increase in the money supply is just, you can't comprehend what the impact of it will be. Then you look at low interest rates. So the opportunity cost of holding precious metals is very low. But you have to look at insurance companies, pension plans, and realize that they've used actuarial tables to determine the rate of return and how they can pay out. And they were using returns of 5 through 7 to 8%, and they're getting 1%. So there's a lot of these large investors have gone into the private equity market, hoping they could take something up. It's a unicorn, and they take it public, and they get multiples of what they put in. But those are illiquid. So you have that, plus you have the low rates of return, which means they're not going to be able to pay out what they promised. And that is going to upset a lot of people. And again, it's a reason to look for something that will hold value, and gold and silver have definitely done that over a long period of history. So it's time to put some in the portfolio if you don't have it. And if you have some, you might want to increase it.